101 here. Don't be overwhelmed when you look at this spreadsheet, okay? Because there's a lot of numbers, there's a lot of formulas and a lot of variables that go into what makes a real estate transaction work, okay? So I'm just going to kind of walk through this as how I would analyze a deal going into any transaction. Learning what numbers are important, which ones maybe not so important but are still a good measure of value versus maybe this percentage versus that ratio. And I'll just give you a quick synopsis of how I would underwrite a deal before I actually went and deployed capital into this. So you can see this is a real estate transaction that is in Kokomo, Indiana. Here's 3 properties right here that I'm interested in purchasing. All the blue numbers are variable, so I can go in and over time use this pro forma to continue to hone in my skills on how to underwrite real estate deals. So I see here the square footage, the land value, the monthly rent. This is important, obviously, depending upon the location and how long the tenants have been there. Maybe there's an opportunity to increase rents, which would inevitably increase my returns. But let's look here at the acquisition and exit assumption. So every one of my deals that I go into, I have about a 5-year window of a purchase to exit. And the reason I do that is because I buy a property and hold it for 5 years. Eventually, I'm going to want to turn and burn that into potentially shuffle the deck a little bit and go and get another nicer property, get some capital gains, and move into a nicer unit over time. So then, like I said, over time, you end up having a maybe a little bit smaller but a more higher cash flowing portfolio and just less management over time. But on this deal, there's these 3 houses here. I'm looking at a purchase price of $150,000, some closing costs. But most important number in real estate is my going in cap rate. That's your capitalization rate. And what that does, that just divides your net operating income by the purchase price. So right here, I'm looking at about a 10.68% return on my cash in the first year on this deal. So a double-digit rate of return, God, in about any market really is pretty solid. You're buying a treasury bond right now for freaking, 1.8%. So I look at this as a very solid, financially sound investment right now. So like I said, in 5 years, our exit's going to be, we'll try and sell this to another investor at 8.5%, looking at a really nice sales price of $215,000 and some change. So I look at this next, I go down, I see my loan to value ratio. That's just basically how much the bank's going to lend me on this deal. So they're going to lend me 80%. I put this as a 5-year term because that's when I plan on ballooning this payment over a 30-year period. Sometimes bankers want to go to 20 years. We can change that. That's going to change the debt service from about $7,500 to $9,000, which will shrink the cash flow, but also you're servicing debt quicker. So there's some pros and cons to that, but let's just stick with a 30-year for now. So you'll see my annual debt service on this is $7,300, okay? Some revenue growth over here, some other just assumptions, okay? Management fee of 10%, that's pretty standard across the board. So let's go in here into the property cash flows now. This is what's really, we're going to open up the hood on what runs this deal. Let's just go down this first column here. So our gross rents are going to be about $23,400. We have to have some, just put some money aside for some vacancies in case we have some turnover when a tenant leaves. So our effective gross income after we, take out some inevitable loss, we're going to have $22,000 roughly in gross income. Here are the other variables that happen to come up when we're looking at how we're going to structure and what's the rates of return we're going to get. $1,900, almost $2,000 a year in property taxes. I do $1,500 in insurance. $500 per property is pretty conservative. I mean, I can do another video on the strategy within insurance on where and how much to insure a property for, but I'll save that for another day. And then lastly, repairs and maintenance. When we buy these houses, we've already put money into them, or we're buying them from a previous owner who's well maintained. So we end up having a very, very small maintenance and repairs. So let's look into some of these numbers here. So we got a total expense of $6,200. Oh, and also property management fee. That's the 10% up. So we're going to pay $2,000 a year, and that's the best part about real estate is that allows us to never have to be the person that has to fix the toilets, get the 3 a.m. calls. We delegate that out to somebody else. At least in my opinion, that's why we wanted to get into real estate, is for passive income and to be able to live our life and spend our time how we want, okay? So let's look at this. Here's our net operating income. This is what we're going to net every single year if we never took on a debt, okay? Never took on any expenses. Or I'm sorry, if we never took on any a loan from a bank. So we're looking at this. So then we're going to take this number 16,000 and subtract that from 7,200, and then we're going to have cash flow to equity, okay, which is $7,800. Cash flow to equity just basically means how much money did I put in the deal and how much am I making out off of this number. Look at this number, almost 29% cash on cash return. You say, well, wait a minute. I bought it for $150,000, but I'm only making $8,700. Well, remember, we're borrowing 80%. So you see our equity right here is only $31,500. So we're dividing $8,724 by $3,150, and that's where we get that 28% number. So that's kind of, so if you can, I mean, your cash on cash return right there, 28%. I look at that as a very, very lucrative deal, especially when it's very hands off and you're just collecting a check every month. So let's go to our returns here. This is kind of that, like I said, that 5-year window. This just basically just goes and describes if you had no leverage and if you did have leverage. As you can see here, a lot of these numbers don't really matter. This is just over a 5-year period. Here's going to be your cash flow every single year, and you're going to be able to cash out your equity when you go and sell the property for $93,000. But here are some numbers that are really important. I look at this number as probably the second most important ratio that's out there behind cap rate. And this is my payback period. How quickly am I going to be able to get my cash that I initially deployed into an investment back into my pocket? So this is the second most important behind the cap rate, because the cap rate's the one that drives the payback period. So we want to make sure that at the end of the day, we keep this number as small as possible. Let me show you an example really quickly. If I go back to my assumptions and I don't use any leverage, okay? I have no leverage here. So I have no annual debt service, right? My cap rate remains the same, okay? Oh, and look, I'm actually making even more money per year, right? No, wait a minute. At the end of the day, the most important ratio is cash on cash return. How quickly can we get our cash back in our pocket? So look at this. Now I'm only earning 10.8%. Then I go to my return, jumps up to 10.42. So those are in years. So I went from almost 2.5 years to now, or 3.5 years, to I jumped it up to 10 years. So that's why we can all agree that leverage is most likely the greatest thing since sliced bread. Oops. Let's see, 0.8. There we go, 80%. So then we go back to our returns and you'll see 3.22%. So at the end of the day, we can all agree that real estate is a way to achieve financial freedom, because passive income allows us to not have to trade our time for money. So at the end of the day, if we can end up earning enough passive income to exceed our monthly expenses, we're truly financially free. We don't have to go to work every single day to earn a paycheck. And that's kind of what I'm here for. And this is what is powerful to me, and what matters most to me is I think the tide raises all ships. This is something that I'm passionate about. I love teaching people how to use real estate to earn passive income and to achieve their dreams, to go out there and spend their time how they want. You can go and start a business. You can go and spend time with your family and friends, whatever it is, but you control your time. Not an employer, not somebody else, not that Uncle Sam the tax man. You control your time and you do what you want with your life. So thank you for watching this. I really appreciate it. When you do have questions, please contact me. Email me at nolan@nolanwm.com, or you can even shoot me a phone call, area code 765-438-5710. Thanks so much, guys. I look forward to hearing from you guys on the next one.